everybody. Today is August 4th, 2021, and I'm back with another edition of the Wednesday live show. And hopefully, the show is actually working because a minute ago my power went out. Uh, Luckily, I have a backup on this particular computer, but my other computer that I had all set up to monitor the show just went off, so. Anyway, that's kind of weird. I mean, literally like 30 seconds before I started here, the power flashed off for a second, came back on. Guess I should have the other computer on a UPS too. But anyway, so regardless whether the show is actually working live or not, I will have the replay up afterwards, which I've discovered most people watch the replay anyway, so no big deal. All right, so kind of a weird market going on right now, and I will show you that in just a second here. Let me close this opening screen. There we go. I like to start off with sort of the bigger picture display, and what you see right there is at the very beginning of the screen, it's the whole pandemic sell-off, and then this big giant rally, persistent rally. See if I can draw a trend line. I'm just gonna attempt to draw a trend line here, and then this is a little tricky. A little bit tricky because, well, yeah, that's exactly why there. You know, I've found a lot of, I guess you'd call them bugs in this version of stock charts that I'm using here. Here we go. That looks fairly decent as far as a trend line. One of the main bugs I keep discovering is that certain stocks I mark up on here, all my marks disappear just randomly. So anyway, and then the other thing I've been having lately is some issues drawing trend lines where every time I move the mouse it draws a new trend line. But all that aside, basically what we have is an extremely persistent trend going on here. And you know, recently we came down, and well, it was a few weeks back, mid-July, a couple of big down days, sort of retested the trend line. If I moved my moved it up a little bit, you see. But anyway, the strangest thing right now, in my opinion, is this. Go to an hourly chart. Um, for like the past couple of weeks here, the market has just been trading up and down in this big giant range. If I go to a 30-minute, you can see that even better. Just a big range, right? There's the lower end of the range. There's the upper end of the range. Up and down, up and down. Let me go to SPX, see what that looks like. I think SPY looks a little bit better when it comes to the gaps and the opens, and but there you go. So yeah, look at that. We keep hitting new highs up here. This is obviously new high territory. This is basically minor dip territory. And so, but here's the thing, there's this big giant range. And so the funny thing is that yesterday morning, it literally retested the low end of the range there and bounced right off of it. And as a matter of fact, just took off. that was kind of odd that, you know, after all this chopping up and down, that we come down to the very low end of the range there and then immediately take off and rally back up to the upper end of the range, right? So I zoom in one more level here just to see what it looks like on a 15-minute. So yeah, I mean, this is a few weeks here, and so it's just basically up down. And so going back to the daily chart here, you can see that, and look at yesterday. Yesterday was a very interesting day simply because the market looked in the morning anyway, looked like it was about to break down, right, from this range, break that low, and then immediately rallied all the way back up to the upper end of the range. It's crazy. And yesterday was all-time closing high for the S&P. So very, very interesting to say the least. But so let's see what else is going on. Let's look at the Qs real quick. There's not a whole lot to talk about today. We have 3 open trades, a few that are pending, and that's about it because the market is basically, still up at the highs of a cycle. And so, these little dips, like this particular dip was so short-lived that it didn't, necessarily give a whole lot of stocks a lot of time to actually set up. Although, the market and individual stocks are two completely different things in this environment. And so there's the Qs, same sort of thing. Just kind of hanging out in a little consolidation pattern. And of course, everybody that's watching the Russell is like similar to the S&P in that it's in a big, wide, sort of choppy range, except for, it's basically the whole year, right? So it's sitting right in the middle here, right in the middle of the range as we speak, and you can see that it's just kind of sideways. And so that's interesting. And of course, on a day-to-day basis, a lot of smaller cap stocks and a lot of just ordinary stocks. The obviously everybody knows that there's just a handful of mega cap stocks that drive the indexes, and so there's been quite a bit of weakness under the surface. And then, there's a lot of particular stocks that have been extremely strong and doing well. And so it's really, like the old saying, it's a market of stocks. And, over the last 10 years that I've been doing these shows, we've seen this a lot of times where the indexes don't necessarily reflect what's going on under the surface. A lot of times the indexes hold up pretty well for obvious reasons, and a lot of stocks, are nowhere near their highs, and vice versa. You see days where the market itself is not doing anything, but a lot of stocks actually do pretty well. So anyway, what I thought we would do is jump into the open trades here. Let me get those up on my screen. There we go. So we have 3 open trades, right? And by the way, this top one here, this CYRX is going to get closed at the open tomorrow. It's going to get closed at the open tomorrow because they're coming out with earnings tomorrow after the bell. So just want to let you know that. And then, of course, these other 2 that have been open for some time here, Kroger's and Pfizer, doing extremely well here. Especially Pfizer has just really, really taken off. So let's take a quick look around those open trades and see what they look like. So here we go. Let's zoom out a little bit. So there's CYRX. Hasn't quite made it to the target. It has made it about halfway there, 3/4 of the way to the target. So there's the trigger back here, 58.50. Yeah, here's one where the initial stop's still actually on here. I was thinking this is one where it disappeared. So this one, everything seems to be normal on this chart. It's my Pfizer chart that everything got lost on, so I remarked it up a couple of days ago. Hopefully it'll still be there when we take a look at it. But so this is a pretty nice pattern actually. You zoom out a little bit here and you can see that there's pullback and a rally, big dip here and a rally back to the highs. And so quite honestly, this one looks like it wants to wants to rally up towards these previous highs here, but you never know. With earnings coming out, you just never know, and so therefore, this will get closed tomorrow at the open, and so no big deal. No big deal there, but just keep that in mind. And so on the home page of the members area, that will be noted as well right there. So when I do the update. Moving on, the next one is Kroger's. And Kroger's, you can see at one point here there was an initial stop down here. Whoops. Oh, these charts starting to act flaky again. There was an initial stop that I believe was likely down here around these lows somewhere, but it disappeared from my screen at some point. So then I marked everything back up again, and so far so good. It managed to save it, but the first few marks that I would have had on here are no longer on there. So, but anyway, so far so good. What's important is what the stock does. So, yeah, I mean this one basically triggered in over here and pretty much took off, and then this is pretty amazing because quite honestly, Kroger's is a low beta. It's a low beta stock, and so it was amazing to actually see it just blast through the target on the second day, right? Just blasted through it, and then spent, a couple of weeks here, well, about a week pulling back to where it took off from, and then formed like a perfect little, and look at it again. So this is kind of, if I'm not mistaken, Warren Buffett. This is one of his more recent purchases. So it kind of makes sense, big grocery store chain, pretty safe. But the funny thing is that, typically it's a low beta stock that doesn't have a huge ATR or whatever, and all of a sudden, it's making these significant moves, these long range days sort of out of the blue. Let me zoom out on this a little bit. Yeah, this is probably where Warren Buffett, or maybe that was back here. I don't know. No, I guess that would probably be here. But anyway, the thing about it when I look at this chart is, it has these like spike ups, big spike ups, and then it likes to pull back, right? Kind of into the main trend, which, just for the fun of it, I'll draw a trend line across there. So that's sort of the main trend right there, and that's getting a little extended up here. So, but nevertheless, still looking pretty good. The stop is kind of lagging behind back here, still at 40, even with after that long range day. But the idea is that it's going to hang back just enough so that it could repeat a pattern similar to this and not get knocked out, right? So that's sort of the idea there. However, typically after a long range day like this, honestly, it wouldn't be a bad idea to maybe protect some of this depending on how aggressive you are with this type of thing. So it's a really good move in a very short amount of time. So and then moving on, we have Pfizer, which has gone almost parabolic here. Absolutely amazing. Obviously in hindsight, it's easy to see why. But this is the one where all my marks disappeared, right? Like, let me see if I can, yeah, I can do that. So this was a totally different look, back here when it triggered in, totally different look to it, right? I remember at one point thinking that it was over, that it was like sort of a one spike and then done over here, which kind of interesting. But so what we're not seeing on the chart here is obviously the initial stop, which would have been down here, right under these lows. So that disappeared along with the majority of my trailing stop moves. But it's interesting to see how this sort of came out of the gate like this and progressed because for one thing, it triggered in on a big giant long range bar higher, and then this day, one more day here, basically, it was like a 2 day, just a huge move, and then it gave it all back and came back down into like the pattern went sideways for Jesus weeks here, weeks, and then it finally formed like a little cup and rallied back up to these prior highs and then just blasted through the target right there. So that's basically what you want to see. And the funny thing is that Pfizer again is also a relatively tame stock that has a low ATR and doesn't move much, and it can trade in a little tiny range for periods of time. But obviously, for reasons that are obvious in hindsight, like I said, the stock recently has gone basically parabolic. So you can also see that there's a P stop, parabolic stop alert, as of last night, and that's up here at 45, which it looks like it just touched. So this is basically the same as Kroger's. With this huge move in this long range bar, it's probably not a bad idea to. What is the low here? Oh, the low is 45.01, so I can see it right here. I don't even need to draw that. So basically, the parabolic stop alert just means that it's a good place to lock in some or all of the profits because the stock has made a parabolic move and typically unsustainable. But hey, in this market, you never know, right? Chances are, I mean, over here it looked parabolic too. It only had basically like 1 day pullback. The low of that day held, and then it made that move. So it's a crazy market. You just never know what's going to happen. And so potential. There's potential for. I think I've been seeing in the news that the FDA is actually about to come out and approve Pfizer's vaccine, which I guess will make a big difference. And then of course they're talking about booster shots, and they've raised the price of their vaccine. And so there's a lot of fundamental news working in their favor, and that is reflected in the chart. So the chart was in a pretty good uptrend ahead of that, and so this little sort of dip right here put it on the radar, and you can see that so far so good. Now, huge move for this particular stock, just based on its traditional ATR. And so there you go. There you go. There's as of the close yesterday, Pfizer was about 17% over the trigger price, so not too bad. And yeah, I mean, I had every single trailing stop drawn on this chart over here, and they all excuse me, they all disappeared for whatever reason. um, the other ones didn't, but this particular one, they all just disappeared. So when I updated this a couple days ago, I had to redraw all this stuff on there, and I put the stop at the time, and then the most current update, stops moved here, and so that's it. That is all three of the open positions there. So not a whole lot to talk about. So I figured what we would do is take a quick peek at the pending trades and see what they look like. And of course, on the pending trades, it's kind of the same thing here. There's only 3 remaining. What was the one that was on there? Yeah, there was one on there, this Newmont, that I mentioned would probably, I just off the top of my head, there's actually a few more I think that dropped off, but this is actually an interesting look at why we use the closing price to trigger us in. And I forget exactly, I didn't mark it on here what the exact trigger price was, but you can see that there was a couple of pokes over the trigger price was like back over here, right? Like I believe it hit the list somewhere towards the end of June, and there was a few pokes at the trigger, but no close above it. And then I mentioned at the time when we talked about it on the show that it was kind of a ugly chart pattern, but sometimes you get big snapbacks from something that looks like this. That actually looks like an earnings sell down or news related, but anyway, long story short, I did mention that if it broke down from this consolidation instead of up, it would likely drop off. So somewhere back over here, probably right around, a couple weeks ago, it just dropped off the list. And there was a couple other ones that broke down like this without ever closing over the trigger price, and they just dropped off the list too. So that's just the way that it works, and it's also, it's a good example. That's why I brought it up of why we wait for the confirmation. Like the close over the trigger is the confirmation because you can get these intraday spike ups or pokes or whatever, and that doesn't yeah, it doesn't necessarily mean that you got a change in trend, and so this one never actually triggered in. So let's see. So moving on here, we got FTAI, which looks like another good candidate for dropping off the list. This is the same. This is a very similar sort of thing here. There's sort of a level here, that it's trying to hold, and so one of two things are about to happen. Obviously, this thing's going to bounce off of support, or it's going to break down. And of course, I've seen this so many times where you get a little foray below that line and then a bounce back up. But anyway, this is a good candidate to drop off the list too. In which case, we won't have very many. We'll only have two pending trades. But I just want to look back at this. I mean, it's pretty nice steady uptrend. I want to see what a trend line looks like drawn across these lows. So that's pretty interesting. That's sort of a confluence right there. So confluence of support right there, and so it's basically, do or die time for this particular stock. If this thing breaks down from here, and maybe one or two down days or whatever, it'll stay on the list. But it actually looks like a fairly decent place to for it to kind of find some support and maybe bounce. But the trigger on this, by the way, is way up here, right? So this is not very likely to trigger in any time, and so that's part of the reason. This is also, this hit the pending list back over here, and it didn't trigger in on this first bounce right here, which is a good thing. That's kind of what we want. So we'll have to see. But yeah, it looks pretty bad right now, and it looks like it wants to drop off the list. So we'll have to keep an eye on it. I don't particularly like that pattern at this point, but we'll see. So XOP, which is the energy, oil and gas exploration production ETF, still looking fairly decent here. It's had a pretty nice little sell down and then a consolidation. Now, of course, it's trading sort of at the lower end here, but the entry trigger on this, just draw that on here just so that we have it for future reference. It's going to have to break above. Let me see here. It's a little tricky to get these exact, but I'm going to try. So let's see. Yeah, it's got to come down a little bit. Whoop. A little. That's close enough. So basically, right now you're gonna take a close over 85.50 at this point to trigger this in. Now, depending on what the stock, well, I should say ETF, depending on what the ETF does in the future, if it consolidates down here, maybe at this lower end of the range, this can theoretically drift down a little bit. That's going to take some time though. So, this is still kind of on hold, waiting for like this pullback to sort of run its course, and then you can see, a couple of similar consolidations back over here. Ran up, kind of consolidated for a while, took another leg up. Same thing here. Over here you have, typically what I notice is a lot of times you have the initial sort of sell-off and then the first bounce, and then you get more of a sell-off, and then finally after some time goes by, then you finally get the next leg up. So this is still a little sketchy. This is kind of, to me, this looks like the first sell-off, and it hasn't really, it's bounced a little bit, but it hasn't really put in like a second point where you draw a trend line like this. So, but hey, you never know. I mean, sometimes they sell down, consolidate, and turn right back up. So it's not looking too bad. Now the price of oil is, I believe I saw it was below 70 again. So there's a lot of weird stuff going on. The interest rates are at historic lows. 10-year note, I think, is hitting all-time lows in the history of the world. 10-year yield 1.2%, and so basically what that's indicating is a weak economy, right? I guess. I mean, that's sort of what people are talking about, and so everything's kind of weird. You got the market at all-time highs, interest rates at all-time lows, and obviously, low interest rates are um, good for stocks. But hang on a sec, I gotta log back in. Log back into my Thinkorswim now that my other computer's rebooted from the power going out. Yeah, I'm kind of discombobulated today because my power went out literally 30 seconds before I started this show, and so trying to get everything going again, and I feel lost without my second computer over there, so I can see what's actually going on. But all right, well, let's move on here, and I said there wasn't a lot to talk about, but all right, so here's the third and final pending candidate. I was actually looking pretty good here. This one looks like it is trading over. It is. It's trading over the trigger price. So I like this one when we first looked at it, and I believe it was back here, but it didn't quite trigger in on this first bounce, which is probably a good thing. So let me see here. Zoom out a little bit. This has got a pretty good look to it. Um, I'm gonna try and mark the trigger price on here. And let's see what we got here. It's a little tricky to do live. Usually what I've found is that expanding my charts to full screen is the best way to mark this stuff up here. So, and right now I got my screen all squished in, but let me try this. So there we go. It's going to take, now if this thing fades back down, it's not going to trigger, right? But That's about as close to 94 as I can get that line. So let's see what that looks like when we zoom out. Whoop. All right, I knew that was going to be that was going to be an issue. So let me try that. And then I'm going to hit, watch this. I'm going to hit save. I'm going to hit save, and hopefully this will stay on here. Interestingly enough, if you look at the, well, you can see it if you're logged in. You can see on the pending trades that the average range. This is one volatile stock. The average range is showing over a month's period of time 7.8%. So this thing can really move here. And quite frankly, I mean it's a really good looking sort of pattern here. Now obviously, you know, there's like a little sort of double dip here, and in order to get something going, it's going to need to break over this little pivot high here. But it's got a good look to it, right? It's got a really good look because, you know, it's one of those crazy stocks that has a habit of just taking off out of the blue and making a huge move in a short amount of time, and, you know, and consequently, you know, diving too. Now, it would be interesting to know what the news was right over here. That there's one other thing I want to check, and this is the reason. This is the reason that I wanted to pull up my Thinkorswim. Earnings are on 8/11. Ooh, that's a little bit dicey. If this were to trigger in today, it would be a buy. Earnings on 8/11 before the market opens. That would mean that it would have to get closed on the 10th. And so if it triggers in, I'm gonna have to. We'll have to make a decision on this, because generally I like, you know, at least 5 trading days to go by before. At least 5 trading days to go by before a stock, you know, gets opened and closed at the because of earnings ahead of time. So yeah, this is a tricky one. This may be a candidate to just drop off the list, because or, you know, you could decide to take a winger on it. It's up to you. But the thing about the system is, if a stock triggers in, and so it would be a buy tomorrow, and so it would be if it triggers in. So that would be hold it on Thursday, Friday, and Friday and Monday. Let me see this again. Get all my ducks in a row here. Earnings are on 8/11 before the market, which means that it would get closed on Tuesday at the open. So basically, yeah, this is it would only be a 3-day hold, you know, based on the system. Now that doesn't mean that you know, you couldn't take a look at this and say, hey, you know. So I don't know. I mean, I'm gonna have to consult with Jeffrey on this one and see. But, you know, that's just how we design things. Is that since they're coming out with earnings at the market open on next Wednesday, you know, would you really want to buy this thing and hold it for just a couple days? Basically, it would be a 3-day. It would be buy it at the open tomorrow, and that's provided that it even triggers in. So I'm gonna get with him. We may just have to ditch this one. So I'm gonna make a note here. Beam earnings 8/10 pre-market. Yeah, that's sort of an anomaly, and, you know, we had one of those recently too. I think it was AMD. In fact, I'm sure it was. Yeah, remember AMD. AMD was pending, and it triggered in, but you know. So here's the thing: is obviously that's a case where, you know, maybe we should change the rules. But the thing about it is, over the years, it's not necessarily it's not necessarily worth taking the risk of holding the stock over earnings, because the last thing that you want is to have one of those 30% gap downs, right? So, and that happens too. But AMD's kind of a different sort of animal, but hey, you never know. I remember when this stock was $2, but you just never know. Along the way, you get one of those earnings seasons where stocks just get crushed. They come out with earnings, and no matter what, it's either priced in, or you have a lot of misses, or it's just part of the cycle. And anyway, so the way that the system was set up is that we decided not to hold a stock over earnings, or get into one where there's like a couple of, like on this one, there's 3 days to hold this stock ahead of earnings, and then we'd close it. So, oh, look at that. Look at that. What happened to the line that I drew? Maybe I forgot to save it? I don't know. Huh, that's weird, but anyway, so that's it. So you can keep your eye on this one. You can do what you want with it, but my guess is the best thing would probably be to have it not close above the trigger, and then just remove it from the list tonight. So you can keep an eye on it. I mean, it might, geez, this may have been the last earnings release here, but a stock like this with this kind of volatility, you could get into this thing, and then they come out with earnings, and it could be down. It could gap down 20% or so. So I like the pattern, quite honestly. Maybe after earnings comes out, if it doesn't move too much, maybe they'll still be viable within the pattern after earnings, but it's just hard to say. So anyway, that's it. Got 3 open trades, and like I said, this CYRX, this is getting closed tomorrow at the open price. So let's take a look real quick, see how it's doing today. Yeah, kind of hanging in there. So whatever the open is tomorrow, going to get closed ahead of earnings. And the best looking one of all is we can't let that thing trigger in. So anyway, so there's the market right here. Big sideways trading range. Yesterday literally spanned the entire trading range, and so it's hard to say, especially in August. Whoops, see, I didn't mean to do that, but especially in August, it's hard to say which direction this thing breaks. Obviously, every dip is getting bought relentlessly, and it's a weird sort of environment, if you ask me. One of the main reasons is because, let me see if I can move that up. Whoop. Wanted to try and get that trend line across the actual lows, but I mean, they're talking about lockdowns again, all this kind of stuff. It's like we're back to the bad old days or whatever. So, but meanwhile, the market's sitting here at all-time highs. And the funny thing is, if you go back in time, just for the fun of it, go back in time to the before the pandemic sell-off, right? Oh, there we go. Like right now kind of reminds me of this. So, the market had a couple of dips or whatever, and this is back in, 2019. And then at the end of 2019, you started getting this real super persistent trend, and then right here, like this little dip right there, was when you started seeing things about, this coronavirus in China, right? I remember how all this started very well, and then the markets like shrugged it off and went up, and hit an all-time high there. And I wanted to do that slower, but yeah. So I mean, there was all the warning signs here. We're seeing videos of people dropping over in the streets of China, and all this talk about lockdowns in China, and And so when you first started hearing about COVID was over here, and the market was just kept relentlessly going up, shrugging it off, and then it took this little dip, and then there was like one more rally to new all-time highs, and I mean, everybody was I don't know what they were thinking. They were just shrugging it off, and they were like, oh, no worries, no big deal. Um, Fed's got everything under control in that, and then you got like all of a sudden you got this one gap down day, and of course, this would be the same thing that you would see right now. Like if you had a big gap down like that to support, everybody would think to themselves, "Oh man, you dip by an opportunity." But that was a pretty big gap. But anyway, that first big gap down was kind of a warning sign, and then it fell. I mean, quick. It was like months of gains were gone in 6 days. 6 days, right? The whole persistent rally got wiped out in 6 days. Then you get this bounce, and everybody's like, "Oh, worst of it's over." That's it. And then down at the lows, let's see where were the lows? Yeah, that was the low. So that was what, 30%? Actually, I think from intraday high to low, it was like 35%, and it happened really quick. But I mean, so anyways, that's gonna stick in everybody's mind. And then this is where, like literally, like at the depths here, right at these couple days, this is where the Fed pulled out all the stops. They lowered interest rates to zero basically, and started QE, trillions of dollars, and lo and behold, they Jay Powell and the Fed performed a miracle, right? They kicked off the current rally here, and so here's the thing. I mean, I'm not saying that history might repeat or whatever. I'm not saying that that's going to happen again, but um, sometimes it seems like the market is ignoring obvious risks, and that was probably, in my whole career of doing this was probably the a good lesson in how the market can ignore obvious risks. I mean, there was all sorts of news about the coronavirus starting up prior to, and the market kept going up prior to like that sell-off. And so, and then this is also, I mean, one of the craziest things that I've ever seen because of how quickly the market tanked and then reversed, and then the persistence of the rally since then has just been extraordinary. And of course, everybody knows by any historic measure, the market is the most richly valued in the history of the S&P or whatever. And so yeah, we're living in some really extraordinary times. Um, I suppose one takeaway is you wake up one morning, you get that humongous gap down or whatever, then it's that could be. I'm not saying that it would happen the same way again, but the funny thing is that first gap right there down was a good opportunity to get cautious quick. And of course, a lot of people shrug that off. They see a big down day, or something happened overnight, and the market's like down a lot. They think that's a buying opportunity, but so every dip since this low has been a buying opportunity. But the next a break of this trend, a solid break of this trend line, or a humongous gap down on some sort of news may not be a perfect dip buying opportunity on day one, right? And then, I'm sort of torn on this. At the time, after this sell-off, I remember like the fear, right? I mean, it's one thing you got, a pandemic all of a sudden kicking up, and then you also have the market tanking, 30% in, a short amount of time. And so that was, and so I'm kind of torn, the Fed probably did the right thing by rescuing that because I mean the last thing we'd be in like a Great Depression had they not stepped in and this market, had sold down like that. So there's no question they rescued the market. So, and of course now they're talking about tapering. The other thing about the persistence of this trend is that the Fed's been, pumping in $120 billion a month. First they threw like trillions at it, a couple of $1 trillion right off the get-go. And then, they restarted QE. And so, I mean, they've been buying everything that's not nailed down, right? Bonds, mortgages, all this to the tune of $120 billion a month this whole time. And so now they're talking about tapering, and it's going to be interesting to, yeah, I've seen people speculate that, well, actually, one of the Fed members, every day they have Fed speakers or whatever, and one of them said that, oh, when they taper and stop their purchases, that they don't expect to have any effect on the market. Well, yeah, that remains to be seen. So, anyways, they're kind of in a tight place right now. So, and then of course, everything everything's like starting to get crazy again. We'll just have to see how it all works out. But anyway, what I always been saying and what I always say, as long as that trend line's intact, uh, can't really get too concerned. And so one of the first warning signs will be when and if that trend line gets violated, significantly, and we'll just have to see. Market could easily pull back to that trend line, poke at it, rally back up, make another new high. I guess it's a lot's going to just depend on how the fundamentals play out. So anyway, I talked enough about off-topic stuff. So um, thanks for tuning in. I will see you here same time next week.